Good day, everybody. Hope you're well. Welcome to today's Inner Circle topic. Trading long-term fundamental ideas. Here's your disclaimer this warning. We're looking to have this tonight. We've just come out of a power outage that struck, but all appears good now. So we'll just keep our fingers crossed that Western Power have done their business. Even Ian, Gigi, Adrian, Wayne. That'll be why, David. I'll explain why there was a slight blip there. Just make sure that we're just showing everything. Let me know you can hear and see me okay. I'm guessing you can with the some of the comments coming through. Evening, buddy. All good. Okay, well, let's get things kicked off. That's cool. Thank you, Jeffrey. That's great. Hi, Chris. Good to see you, bud. Hi, Jerry. Good to see you as always. Good day, Mark. Right, let's get into it. And let's start with our market watch section. Of course. Interesting day. Well, what on earth is happening here? Okay, let me just try and resolve whatever's going on here. There seems to be some automatic roll on there, which I'm not liking at all. No. Oh, my world is full of technical blips today. Apologies for this. Let's, I'll tell you what we'll do. We'll end the show and we'll start this again. Right. There we go. I think we've found it. Right, okay. Let's give this a go again. That looks better. I'll be talking even faster than I normally do. There we go. Very cool. Okay, so you should see a market watch screen there. If it's worked, it's out of date. Absolutely. Hey, Rachel, good to see you here. Cool. Okay, let's just briefly talk about what's coming across the news and have a look at some charts, etc. It's been a fairly eventful day, and particularly in the FX markets, particularly if you're looking at AUD or New Zealand dollar. We had obviously a relatively positive lead from Wall Street last night, and all major indices up with the exception of the Dow. And everything looking a little bit cautious because we kick off earnings season with the big banks tonight. We've got JP Morgan, Goldman Sachs, and Wells Fargo from memory reporting tonight. Now that's obviously this is the start. Week one is always the banks. So we've got Morgan Stanley and Citi and all of you, the big players, reporting over the next couple of days. A couple of airlines in there. I've got, I think Delta Airlines are reporting as well. But we've got a situation where we've just got equity markets just keep on going higher and higher now, whether that's due to stimulus checks getting in people's pockets, and I think, well, we might as well stick some more money in the market like we did when we got our last stimulus check. Bond yields have certainly settled down. Biden's $2 trillion infrastructure plan, I think it's $2 trillion, appears to be in the planning. And there's no bad news. We've still got some news of reopening, and although it's slower than hoped because of vaccine rollout delays, etc. Some countries in Europe, as well as Brazil and India, that are getting spikes in COVID. But generally speaking, the positive vibe continues. But the debate is, of course, with the earnings coming across, for those of you less familiar with stock earnings seasons, is that essentially all of the, or the majority of companies' earnings are crammed into a 3 or 4 week period in the US every quarter. And from that, of course, we can tell how overvalued or accurately valued or undervalued, I guess, though that's unlikely at the moment, companies are compared to how they're performing and what they're projecting going forward. So we've obviously got a good picture priced in because, or certainly better than has been the last couple of earnings seasons. And this, but nevertheless, guidance last time was still fairly cautious. So what I suspect may happen is certainly any news that comes across that's okay, that beats expectations, we would expect it at least to hold price, if not move higher, particularly if that forward guidance follows, because it's two that go hand in hand. Somebody reports a good last quarter, but cautious forward guidance, then the markets won't like that. So I think the markets are going to be particularly brutal with anything that doesn't meet expectations, and we may get, but I think we may get more surprises than not. But of course, that's just me having a little stab in the dark, not representative of Go Market's opinion. So with that being where it's at, obviously what the question is, well, what impact is that going to have on other asset classes? Well, we know that there's a relationship there between the S&P 500 and the US dollar. We can see that, and we'll have a look at, just to refresh that, we'll have a look at charts in a moment. So if we see a continued move up in equities, we'll see a continued move down in US dollar, and that's going to benefit non-USD currencies, particularly, of course, the euro, the commodity-based currencies. On top of that, we've got futures contracts which have essentially gathered a bit of enthusiasm during the day, possibly a little optimism going into that first earnings report. It should be due a couple of hours before US market open. We had a positive day in Asia despite a very, very cautious start. We've got a follow through of that in Europe. So a general good feeling vibe going on in the market at the moment, with little really apart from earnings to get in the way of that. We've got both the ECB President Christine Lagarde and the Fed Reserve Chairman both talking today in their speeches to various entities. We suspect there's unlikely to be many surprises in that. And indeed, the US Fed chair has actually been quite positive about outlook. We had inflation data out yesterday from the US, which is really important, which did show that there was a slight increase, but it's still sort of historically quite low. 0.6%, I think, is the latest figure. So that all bodes well. That all bodes well going forward. So what we're going to do is just going to flick around, put some meat around those bones. Let's just have a look at the future. You can see they're only very mildly negative, so very mildly positive at this stage. We can see the Aussie and the Kiwi have suddenly woken up after really what's been a tricky couple of weeks. We'll have a look at some spectacular charts in a moment from them that have occurred over the last sort of 6 hours or so. There is the European Open. You can see the DAX is a little flat. We've got the FTSE looking pretty strong, and the CAC looking okay too. And if we just pop to the, we'll just pop back here, you can see gold and silver under pressure a little bit, which is surprising because of a USD negative USDs in response to this slightly positive equity market issue. And if we look at the economic data, there is the beige book out, but I think there's not going to be any surprises in that. And so really the only data out of any significance is this industrial production number coming out of the Eurozone, which, let's just refresh. Outside of that, it's the two speeches by the two relevant Fed chairs that may grab interest. You can see that's come in. Oh, slightly down, but slightly better than expected month on month. So nothing there to grab the grab the news. So we've got import and export prices from the US, not a market mover in any way, shape, or form. We will be watching bond yields again. They are slightly to the upside, but you can see it's those two speeches from the ECB president and the Fed chairman which are going to possibly have the greatest influence, but they're not due out for another 4 or 5 hours, and depending on which part of the country, and it might mean you're already resting up. So let's have a look at some charts, put some meat around these bones. Let's look at the Nasdaq hourly chart first. That's since Asian Open this morning. You can see it's just gradually moved higher, particularly in the last 2 or 3 hours. Put it on a daily chart, you can see record highs yesterday. And then likewise with the S&P, just keeps on going up. So from, if you like, the last sort of couple of weeks, we've gone up around about 5.7% on the S&P 500, and we've recovered all of that correction, 11%. But again, if we look at the last 2 weeks, we're up in excess of 8% on the Nasdaq, which is something that we've been talking about for a few, in fact, for a week or so. We can see that US dollar inverse relationship to equities. That's now well and truly through that 92.50 level and heading downwards back towards 91.30, which is the established support. And consequently, of course, we'd expect gold and silver to be smashing their way through the ceiling. Gold are not doing that, really. They had a good session yesterday, but a significant lack of enthusiasm today on gold. Silver's looking slightly better. We had a key level at $25. This was last week's high, where we're trading near now at around about 25.50. So we've got about $1 range. If we can break through that, we've got about $1 to the upside, 26.50. Interesting, we're seeing that slight disparity between gold and silver again. If we look at the local index, we'll have a look at the ASX 200. Finally, last week broke this 68.89 level, and we're at 7,000 now, which is obviously a big round number, which the market will require some what's the word, persuasion to continue to move higher. But we are, if we just put this on a monthly chart, still looking quite positive, and at last the Aussie market has sort of caught up with other equity markets in terms of not only its recovery but its ongoing or the thinking that there's an ongoing sort of move higher. If we look at some currency pairs to start with, here's the euro. That 119 was important level. You can see how we tested 4 days on the spin, broke it yesterday. Some follow through today, but not changing the world. We have got a resistance that's fairly close, which we didn't quite make our way up to. So that 30 pips higher than where we are now is probably a more important level. If we look at USD, yen has been strong against most currencies over the last week. And you can see there that we've got this move back down towards this key level around about 109.15. We're testing that, although we're significantly lower early in the day. You can see so here was our low point in the day. You can see we had a couple of pups at this 108.80 level. Now we've just sort of moved up slightly, but again, nothing there that would have me particularly enthused. It would need to break these pivot highs, and then we've got a resistance there about 10 pips above. So maybe other opportunities. And the Aussie US is possibly one to have a wee look at. You can see that pop higher on the daily chart, or indeed the 4-hourly chart if you want. It's already done its run. If we put it on an hourly chart, you can see how this just smashed through that key level at 76.60. But really, you could have almost traded this as a breakout strategy here and then accumulated into the position there. And this is going to be replicated on the yen, which is that would have been an even more compelling trade with that breakout there, up to this level here, which would look as though we could get stuck at. This next candle is probably pretty crucial on the hourly chart. But on the daily chart, you can see if we do break this level, there's that top line we just put on there. If we do break that level, then possibly, and we do get some continued momentum, there's another 40 or 50 pips up in that. Look at the euro yen, you can see we're trading very, very range bound. Big wide wicks, so big wide candles with long wicks and small bodies, so undoubtedly a state of uncertainty there, about a 70 pip range from top to bottom, which we're sitting in the middle of. So currency markets have been quite difficult to play over the last little while. Let's just have a look at the Kiwi as well and see how that's traveling against. So look at it against the New Zealand, look at it against the USD. You can see a nice pop today, which really we could suggest that was the key level there. We've now essentially moved back up to another, or if you like, the next rung on the ladder, which you would put at 71 cents. Failed to break through that with any vengeance, but if we look at most of this action has been in the last 3 or 4 hours or so. So you can see there we've just had one pop above this level and just drifted down a little bit, but those wicks and that volume suggests profit taking and a little bit of a pause to see what might come next. If we see it move above these pivot highs and the volume increase again, we could be back on for a further move up. If we look at the 4 hourly chart, just as a yardstick, possibly another 70 odd pips in that. If we get a good run, maybe a pause about halfway up that, so maybe about 40, 50 pips in the first instance. But undoubtedly, strength in the commodity-based currencies that we haven't seen for some time suggest that we've got a reignited passion for those. In the stocks, really, it's been, as I said, there's been a few that have caught our eye. ASX ended up about 0.5% higher, I think, but we saw a few exceptions. We saw Galaxy Resources just continue to move higher. This is one of our, we've been watching with an electric car play, we've been watching two of these stocks. We've been watching Galaxy and we've been watching Pilbara Metals, which also popped higher and is heading towards 135. So both of those look strong. Pilbara sort of moved a little slower than Galaxy, but nevertheless both are looking pretty good. So ones to keep an eye on, undoubtedly. APT just keeps going higher. We talked about ATP before. We accumulated into this. We showed you that last week, those who looked at relevant charts. And if we look at Zero, which are the other outperformers, again, this is one we accumulated into, took a lot of profit at the end of last week, and it's just continued to move higher. Again, we are at the next key level, 145.60, where we closed today. Break higher than that, and the next step up is around about 153. Our chart of the day that you missed, if you didn't see this morning, was ResMed. If it breaks $27, that's still relevant. We wanted to see a break at 27 and it virtually finished on it, so that's still relevant for tomorrow if we get a push above with an upside target around about 28.35. But really, this is where some of the attention will be, is JP Morgan. So whatever happens with this tonight, along with Goldman Sachs, JP Morgan have beaten expectations, I think 8 times out of the last 9 earnings seasons. But market response is often mixed, because now the expectation is they'll beat expectations, if you see what I mean. So that's one to watch. The other one that's really we talked about a couple of weeks ago on one of the live sessions is Apple, and that's why we were interested in a move around about 1 over 128. You can see how it's resistance here and here and support here. We subsequently moved higher, and we're now at the next key level. So if we get a break on that, we could retest highs around about 145. So certainly the appetite is back into Apple as well, for those of you looking at US CFDs. Quick look at the FTSE for sure, and then we'll start to talk about the topic of the day. So here's the FTSE. Slightly better today, around about that 6,900 level. We want to see that held and then sort of move higher from there, of course. We'll look at what's happened over the in sort of trading since start of Asian markets. We just sort of moved up slightly, and then of course we've got the open in Europe, and so we're struggling a little bit to find our feet with the FTSE. So just a little bit of a pullback, but generally speaking, still remains obviously in a significant uptrend, and it's do we or don't we hold this key level at 6,900 and subsequently move through it. Okay, well that's a little bit of a look around the market watch. Let's just we'll come back to those as we go. But let's get into what we're going to talk about today, which is really, we sort of talked about our third strategy last week. We've talked trend reversal and bounce, sorry, trend reversal and breakout ad infinitum. But a couple of weeks ago, we talked about accumulation strategies, and we showed you that. We followed through with that, showing you a couple of examples on share CFDs. Sort of live as they happened for those of you who attended the live updates. I hope that was useful. And then we covered bounce strategy last week, and so that leaves us the one which is probably least adopted, and that's trading a long-term fundamental idea, which tends to be a longer term hold, and you're using the technical information you see on a chart to refine your entry. So of course I'm going to put this up again. This is the theme of the month, this Trader IQ theme, and so this is something that we've been talking about quite a lot. For those of you who missed the session last night on trading development, I would suggest you have a look at it. It was a pretty well evaluated session, and there was a download from there which I think would be quite useful. So drop me an email if you didn't get to that. But really, all of this is based on, we look at market action, we've got to interpret that, have the systems in place to do this, and then make decisions and behaviorally respond appropriately, and then of course that creates our outcome or results. If we look at what that means, is that one of the systems that we need to develop is a long-term idea, and that's the concept of taking an idea and put it into some action. Of course, we all have these ideas about what may do well in the long term, even if it's not showing it on the chart right now. And of course, we hear other people's opinions and thoughts about what might happen in the future to not only the economy as a whole. And weren't those people who said precious metals were going to be strong very, very wrong? And the US dollar hasn't really dropped into oblivion. Asset classes and whether such will be viewed as positive or negative. Remember, all that is known or expected is already priced in. So that's an important point, and we'll come back to that later. However, we want to systemize this. We want to make it so we've got something that we can be consistent with, and we can measure the success of it or otherwise. Now, clearly there are two, if we go back to that, sort of previous slide, actually, let's not do that. With the processes, there's two things that are really key there. First of all, is this market interpretation, this interpretation of what's happening in the market as our first stage of trader IQ. So it's been able to read what the drivers are and what both the headwinds and the tailwinds, sort of up and down, and also what may happen next. So there's this. It's not just picking an idea out from thin air. There's got to be some process behind it. But of course, if we've got a system behind what we're doing, then we can measure it and we can refine it and we can theoretically, and we can journal it, of course, guys, and theoretically we can sort of go on and forward, making sure that we have this to guide our actions, and not only in terms of entry, but also importantly in exit. And without this structured approach, most find it really, really difficult to pick long-term positions, and particularly if you're used to being a technical trader. So if you're used to looking at daily or hourly charts and making a decision on indicator A, B, or C, and then you switch to a long-term view, it's really difficult to switch that off. Really difficult to switch that off and see and let something breathe a little bit, let it bounce up and down. And so it may be almost a hybrid that's that could be the way forward, but we'll talk about that in a little more detail later. But so without this structured approach, we find people migrating back to what they're used to. So we'll return to the short-term and technical picture, or they'll simply take a stab. They'll put up the trading dartboard and lob a couple at it and hope they're going to stick. Now, what this results in is two things. First of all, it could obviously mean that you miss out on opportunities. And secondly, it could mean that you're increasing your risk. You're putting your eggs in a basket, which really shouldn't have any eggs in it at all at this stage. So how can we be better than that? How can we sort of develop a system to do that? Well, what I thought I would do is take you through a process. Is anybody else having difficulties with sound? Jeffrey, can you drop me an email? Let me know you can hear me okay, if you can hear me okay. Oh, okay. Let me just send a message to the guy. Whoops. There we go. Done. Okay. So I've lost my train of thought now. Okay, so yeah, so if you want that session, just email me at mike.smith@gomarkets.com. No drama with doing that at all. So what I've done is I put together a process, that's where it was, put together a process which you can try out, which you can use yourself, which encompasses all of the things that I will consider to be important when you're looking at a long-term view. And so what I've done is I've chosen to give an example here, and then we'll talk about the particular aspects of this, and then you can have a go in your own world. Okay, so our idea is that there'll be a significant recovery of international travel by 2021. Now that is all good. Okay. It appears as though the sound is okay. Let me actually just in case there's a little bit of, we'll maybe shut down a couple of things here, just to reduce the bandwidth load. There we go. So if we have this as an idea, so we've got this as an idea, it's nothing new, it's nothing exciting. It appears to be what the whole world wants at some stage, but of course we have this idea, and the question is, how do we actually take advantage of that? So first thing we do is we sort of gather some evidence. Okay, so we make the case for getting interested in this as an idea. So obviously we start by looking at, by sort of suggesting, and this is what I suggest you write all this down as part of your plan. And so as you develop your plan, you'll sort of say first is gather evidence. So COVID-19 has obviously impacted on industries and GDP of countries who have a large reliance on tourism for their income. Of course, we had the broad-based selling in stocks and service-based companies, including airlines and accommodation. But what we've seen is, as steps towards a recovery have been made, particularly in the vaccine world, even if there's a lot of countries remain in lockdown or restricted to international travel, we've sort of started to see incidents drop, and as incidents drop significantly, as vaccines come on board, as small corridors start to open, we've seen a recovery. We've seen a recovery in that. We've also seen, just to back up this, every time there's some poor news, we see some of these asset classes drop. Now, it's important that you gain some counter evidence, if you like, or the counter argument. And the reality is that the markets are forward looking. Okay, they price in what is already expected. Remember, I said that, and that's an important point, as well as what's happening now. So there's some debate about how much might be priced into some of these asset classes. And then there's additional concerns about the longevity of vaccine cover, different virus strains, etc. And then, of course, with business travel being a major part of travel, international travel, and national travel for that matter, there are questions about, well, look, what will the new normal for business be? Will it be that there's less and less travel and more done online? Is now the habit, or will we return to a hybrid of that, or will we return to as it was before? Many suggest it's the middle one of those. So we've got our evidence to back up our case, and then we want to get really sort of nitty-gritty down to what the impact might be. And obviously, we would expect some strength in the airline and hotel sectors in terms of stocks, and we may also see further buying into currencies where countries and corridors open faster. So the Asia Pacific is an obvious example of that. And therefore, we then come to our potential approach. So we might say, okay, well, we wouldn't mind a long-term position in the Kiwi versus possibly the USD, because of course, or maybe the euro, because it's fairly obvious that corridors will open up this side of the planet faster than the other side of the planet. And of course, there's the airlines. And so what I thought I would do, just to sort of back this up, is just have a quick look at Qantas and just explain, using a Qantas chart, how this all fits. Okay, so we can take that idea that we've just talked about and say, well, look, Qantas was pre-pandemic a stock which was worth 731. Okay. Now, if you want to look further than your MT5 chart will let you, then you can go back. You can go back further, and you can sort of see Qantas up even higher than that back in 2018. But that's 2018. So let's bring it back up to early. We'll have a look at that, Alison. We'll have a look at that. So there's the pandemic. So it already dropped off a little bit down to around about $7. Then pandemic became the thing, and we saw it drop significantly and drop all the way down to $2. So we've had a startling recovery since then, and that's based on, well, look, first of all, maybe this is overkill. So we always get that overshoot. So we found our level at around about 350. And then as news came out, well, look, it's not as bad as we thought. Okay. Then we got a spike up, and now it was an overkill on that side to the upside, up to $5. Now, $5 is an important point. We've got to pull back again. And then we got vaccines. So as we got vaccines coming across the wires, we got this sort of action. Okay, so we look back to November. That was the first vaccine that came out. And then we got a couple of others which pushed it up to around about that 570 level. And since then, we've had two stabs at 550. Now, this was Australia opening. This 200 MA was Australia opening more fully. And then, of course, we had that move up. Then we had the pull down on, hey, Europe is starting to relock up, and the American picture is just getting worse and worse and worse. There's no signs of any. We had a couple of Asian countries had spikes. So started to get a worry again, pull back to $5. And then as we started talking about corridors with New Zealand and possibly Singapore, then we had it pull back up to 590 in the last week. So of course we showed you an accumulation. We bought some here, we accumulated here. This was a short-term trade, not a long-term trade, but we showed you how to play that bounce. That was a good bounce strategy example. And of course we got out of them at the top. But then of course we've had Scott Morrison. We had some issues about AstraZeneca vaccine. We got Scott Morrison shouting hard from the rooftops about how unfair it is that we can't get our promised deliveries from Europe. And of course, we had today, just to help things downwards a bit further, we had sort of concerns about the Johnson & Johnson vaccine. So what we've got is a stock which is significantly better than it was, but needs some good, is very responsive to any news that may be associated with a quickening or a slowing of reopening. So that's just to put it into context as one of the stocks we could potentially look at. You can look at any of the others. You can look at Webjet. It's not a dissimilar picture in Webjet. We got slightly more excited about vaccines, but you can see what's happened over the last week, pushed back below that 200 MA. So, but that's where it's at, okay? But we're going to focus on Qantas because it's probably the best play at this stage in this sector. Also, if we look at Aussie, let's say Euro Aussie, okay, so we'll just flick that on there. So Euro Kiwi, okay. So here's Euro Kiwi, where Euro Kiwi sits. So we're stuck in a trading range. Interestingly, how weak the Kiwi looks versus the Euro right now. Whereas we'll actually put it on a weekly chart, and you can see this, that we've had this bounce since the beginning of the year with the Kiwi. And so if we were to be interested in this, well, we'd want to see some up move, possibly on the weekly chart. But would imagine if tourism returns as New Zealand, and unfortunately New Zealand won't be able to open corridors up quite as easily as other countries because they've obviously got similar vaccine problems to over here, if not a little worse. But we have got a 200 MA on the weekly chart there, which could be a good signal that things are returning. But you would imagine that one of the key economic numbers is tourism numbers in New Zealand. So you'd imagine that would benefit Kiwi GDP, and hence would be supportive of the currency. Okay, so that's just a couple of examples. Just a little Euro Aussie 1 hour doing a potential bounce on support. Euro Aussie. Let's just have a quick look at Euro Aussie. On the hourly. Yeah. Okay, so we've got a potential bounce going on here. Possibly that level's more important at 155.41. Needs some extra to come into this to get excited. What's the euro? So interesting action. Thank you for that, Alison. Keep an eye on that, guys. So what I've tried to do is paint a picture of what your system could look like. So your system is, you have an initial idea, then you gather evidence and counter evidence, then you say what potentially that might impact on, and then your potential approach to take advantage of that. So your idea should be sufficiently specific and clear to enable you to gather the right evidence and counter evidence. And you ideally should be able to identify a potential timeline when it's more likely to happen. It's sort of more difficult in this case because obviously it's a bit of a moving goalpost. But as long as there's continued progression, we should see these assets increase, with the proviso, of course, that there's going to be pullbacks if there's any sign of it being pushed back a little bit, and gathering momentum if there's signs that it may move forward a little bit from that which is expected and priced in already. A really good example of this that we gave during the time was the elections in Georgia for the Senate. So we had the idea that Democrats would win those, which indeed they did, and what impact that would have on markets. And so that's an idea which had a specifically set timeline. And so what we then can do is, if we gather the right evidence, we use that evidence to sort of suggest what the potential is on alternative asset classes. The more defined the timeline, the more acute that any move may be. So that sort of election issue was a very acute timeline. I remember we did a similar thing around Brexit. And this was all to do with Boris Johnson getting into power. And the markets moved exponentially as soon as the polls came across, as soon as the exit polls came across the wires. Didn't wait for the result, but as soon as the exit polls came across the wires, we had massive moves in a lot of asset classes because of that. So that, if you've got the more defined the timeline, the more acute the move may be if it's related to a specific event. If we look at evidence, then it's essential to back up your idea. You can't just do it on the opinion of someone else you hear on TV by putting your finger in the air and sending out to the market gods. You've got to have some considered thinking if you're going to systemize this. And this, you can view this as almost a tick list, in the same way that you have a tick list when you enter on a breakout trade. Right, I want it to be half an ATR above a resistance level. I want to see the candle close in the top third. I want to see increase in volume. That's a tick list, tick, tick, tick. Your evidence is almost a tick list also. So you're creating a tick list, and you're going to use this as the gauge to suggest when your idea has gone against you. Okay, so, and potentially so exit the position. Okay, so if we get all of a sudden news across the wires, come across the wires that, hey, look, there's two strains of COVID-19 which are completely untouched by the vaccine, and all of a sudden everything will be in chaos again. We'll get a massive market drop. but the first sectors are going to be the ones that we've identified as possibly of interest. Okay. And as part of your planning process, if you can look at sources, remember there are sources which are opinion-based and sources which are evidence-based. So it's a reality. So the COVID figures are a reality. The vaccines going in people's arms, the numbers relating to those are a reality. The evidence of people talking about opening up corridors are a reality. The time frame that this may all happen is an opinion. The rate at which that might happen is so the rate at which all this might happen and where it's going to happen in A and B in 6 months and C and D in 12 months, that's all an opinion. Okay, it's not known. It's based on on reasonable thinking. It's not just someone pulling an idea out the backside and pushing it out there. So hopefully it is based on reasonable thinking, but you can weight this accordingly. And the stronger you've got an evidence-based rather than opinion-based evidence, the more likely it is theoretically to move. Okay. If your evidence that you've gathered is almost entirely opinion, then that again would sort of say, well, look, that evidence is okay because it is still evidence. It is still what people feel. It's still what people are likely to believe if X, Y, and Z happen. Then that may affect not only the weight of your the thinking behind your idea, but also in practical terms, you may say, right, okay, we're going to potentially just accumulate into this idea until we get some real evidence that it's happening, or we're going to position the size smaller. And again, I just want to keep on reiterating this. What is expected is already priced in, okay, to a large degree. And as I said, comparison of a previous pricing state may help. And that's why I showed that Qantas example. It's a really good example of how the price of that asset breathes according to that specific news that's coming out. The Aussie dollar and the Kiwi, for example, which would obviously benefit from a return of tourism to any degree from what it was. The difficulty with that situation is, of course, that there's so many other things impact on AUD or NZD. Okay, so it's difficult to weed out these. So it may be that your idea is that the Kiwi or the Aussie will benefit, and therefore you look at the evidence that say that may be the case over the next few months. So metals prices continuing to be relatively strong, opening up. Infrastructure spending in China is on the increase, so that's going to benefit our economy. No evidence of inflation. So all of this, or evidence of inflation, increase of inflationary evidence in Australia. So all of this could sort of, and then COVID-19 reopening, return of tourism. All of this could be part of an idea relating to the Aussie dollar specifically. And as I said before, it's really important to look for counter evidence. We often have a tendency to search for things that are going to back up our idea. This is termed, because you're not going to get away without me talking some psychology, this is termed a confirmation bias, where we simply ignore anything that doesn't fit what we think and embrace anything that does. And as I said, this weight of evidence that you provide may only not give an idea to get into something long term, but also may give you an idea about how big a position size you're going to take in it. And as well as that, do you accumulate into the strategy, or just start from a basic lump of cash that's in that particular position as an idea? So when we look at potential impact, the next stage of that process, then you're making a judgment on how it's going to impact on various asset classes, including direction. So all of those assets that will move as a result of that particular event or that particular idea happening should be outlined, because it may be that something that doesn't do well in that situation may be maybe way to go. So if we do get the reopening story, then you would imagine Zoom will suffer because of that. Now, as an example, now we have already a major part of that priced in, perhaps, but there's an example. Or that if we are strong if we are strong the AUD, it's all very well we're saying that we're strong against or strongly with the AUD and New Zealand dollar for the next 6 months. But what against what? Against what? Is it the euro? Because the euro is in a worse state than we are regarding COVID. They've had to put in more cash than we have, which is potentially inflationary there. So what is it about? With currencies? It's against what is really important, or is it simply we're going to do it against the AUD right across the way? Absolutely, it is important that we don't overcook this. Ultimately, we've got to plant our flag, and it's the same. Again, what I'm trying to do here is saying, look, it's the same as in principle, it's the same as exiting a technical trade. We have an idea, we have a set of criteria to get in, and we use those criteria, i.e. that idea not working, to get out. All we're using is indicators rather than opinions. But it is important that you have something when you're gathering evidence. There's something called saturation, which essentially means that you're not actually getting anything more useful in. So apart from just Joe Blogs on the TV popping onto the news and saying, well, I think this. If that's the only new evidence you're getting, then you've reached saturation. And if at that stage you say, well, look, it's not significant, not a robust enough idea, then you don't trade it. So obviously, it may be that during this process you decide, well, the best way to trade this is not actually gold and silver. Let's say we had this idea that gold and silver were going to continue to go down for whatever reason, and everybody's money wants to go into Bitcoin and Ethereum as a safe haven asset class now. So let's say we had that as an idea. Then I'm not saying that is an idea, by the way, just to be absolutely clear. So you've got to make a decision as to how you're going to best play that. Do you play a gold or silver stock, or do you play the gold and silver commodity? Now, there's a strong case for the latter because it isn't subjected to company risk, but it may be that you haven't traded commodities before. So you're not very familiar with how things are priced and how things move. So if you're having an idea like this formulating, it's worth just having to play on your demo account and make sure you know how gold and silver move. Okay, and through this process, through looking at the potential impact, you come down to the decision, this is how I'm going to play this. This is the asset class I'm going to trade. This is the way I'm going to trade it. Now, just a word of caution. We've mentioned a couple of things that could benefit. Let's take the airline stock, the travel company, and AUD and NZD as all beneficiaries of this particular idea. You've got to be careful that you don't open. If you are going to open up multiple positions to trade this idea, then you've got to be careful, or you've got to be aware that yes, they could all go with you, but if they do all go against you, it's going to multiply by multiplying your exposure, you're potentially multiplying your loss. So, and obviously you've got to make a decision on position sizing, because what we do with this is, let's say we were trading Qantas. Let's go back to this. So let's say we're trading Qantas. it would make sense to say, well, look, if it gets down to $5, I like this idea going forward. I'm going to start accumulating into this, and I might accumulate more if it breaks that 550. Okay, it makes sense to start to include the technical picture about how you're going to behave at various points in time. And you're still going to set a stop on the system, because there could be something that happens to Qantas that just is completely unexpected. They go bankrupt, whatever. Okay, so you're still going to have a stop, but obviously it's going to be placed fairly significantly down. And that is obviously going to affect the size of your position. But remember, this position is a relatively, in a lot of cases, is a relatively, like this idea, is a relatively long-term position. So looking possibly to hold this for the next 6 months. And so you're still going to have a stop in place. Now, that is a safety net stop. That is an idea stop. Let's call it an idea stop. That's a good phrase. I've never used that one before. Let's call it an idea stop. And that's when your criteria that you use for entry are no longer valid. So we're no longer getting opening. We're getting strains that are not responding well. And if that starts to happen, you could say, well, let's just get out of it. And so your potential approach, what you're actually going to drill down and trade, has got to be based absolutely on your idea, your type and your weight of evidence, and the potential impact. So this should narrow down your thinking on the asset classes, the position sizing, the exit strategy, which we've already talked about, and the timing of entry, which you can start to use a chart on. Why would you buy Qantas when it's still moving down? There's a clear support level. So let it drift down, and then when you see signs of a bounce, why would you buy it at 5.30 when you can buy it at $5? Okay, at 5.10. So you set yourself a line in the sand. Well, am I going to wait until there's a technical sign, or am I actually going to set a price point based on what's happened before? So that's it. I sort of tried to give you a process and try to break it down into its key levels, but we can't do this without talking risk management. So remember, you're trading a complex set of variables which are not only to open to change in market thinking, but also to a degree of impact. We don't know how much is priced in. So you've got to view this in the same way that you would any trade. If you get evidence coming across and your underlying asset isn't moving, it probably means it's the wrong asset class, or it means that the idea is not good. Obviously, we've got to make a judgment on position sizing and note that issue about multiple positions. And always have a safety net stop in just in case something ridiculous happens that's completely left field. Although we are placing any technical stops right away from the action now, because we want it to breathe as news comes in. And obviously, the psychology of execution, having discipline exits is still an issue, even if it is longer term. Just because you're trading something long term, it doesn't mean you get sloppy with exits, either from a capital risk point of view or a profit risk. There's always the danger when you're trading, a more acute danger of staying in a trade, even if the evidence has changed, if it's a longer term trade. As I said before, if you identify an asset class that you think may benefit from this, make sure that you are competent to trade it. Give it a test on a demo account. And obviously, we've talked minimalization bias before in a short-term way, but in the same way that you don't want to sort of procrastinate waiting for more and more evidence. Neither do you want to make decisions based on evidence which isn't strong or isn't sufficiently well thought out. And as I said, what I would do is, assuming in your trading plan already you've got maybe a strategy outlined for a bounce, you've got a strategy outlined for a trend reversal, be it a moving average cross or chart patterns or whatever you're using, or a breakout strategy, you would have this as a separate page in your strategy in your trading plan, which really comes back to this process. So what I've tried to do here really is sort of give you an ABC of how you might sort of turn some of these longer term ideas that you've got, because you're very clever people, a lot of you. And for those of you who are still becoming clever, then this might be something you want to have a look at going forward. I occasionally do make reference to these on the live sessions that we run, as well as obviously on the Market Watch section of Inner Circle. So keep your ears peeled and listen to some of the rationale behind what's been said. Obviously, if you hear something on the TV from an expert that's dragged on, that's okay. Make some notes in terms of what he's saying, in terms of the evidence, and then go and check it out for yourself, as exactly you would if you were given a hot tip on a particular stock or currency or index to trade. You wouldn't just trade it without having a look first. So do your own due diligence on anything you hear, in the same way that you would with a technical trade. Look, I'm always interested to, just as another example, just one we've been talking about for a while, and we put this up before, so that Galaxy stroke Pilbara Minerals trade, there, either one of those is based on the surge in the interest for electric cars, and both of them produce the lithium. They're going to be required for the batteries. They're both in a good position to benefit. So that's another long-term idea. LYC, another stock that we've been tracking for a number of months, looks to have paused, but that's based on the idea that Australia produces around about 8% of the world's rare earth minerals, and China produces about 91%. So we're in a fairly strong position, with the exception of China, to sort of put some rare earth positions out there. LYC is the best stock to trade that with, and so hence that is one of the reasons, with China reducing their exports, that stock has continued to go higher. The Aussie dollar has benefited from most of the year because of where metals have gone, how we've opened up fast, and we've talked about that on regular occasions. So keep your ears open for when we talk about this sort of stuff, and have a go. So what's your idea? I mean, that's really what it boils down to. What's your idea? So put a case together. If you want a copy of the slides, drop me an email at mike.smith@gomarkets.com. More than happy to give you it, so you've got that process in front of you as you do this. And I hope that helps you along in terms of starting to put this as yet another strategy in your toolbox. Okay. Just flicking through and just making sure. You can't trade CFD on a demo, Chris. Yeah, that is being addressed. Hopefully we should get some news on that in the next 2 or 3 weeks. Obviously, such minds have been occupied by ASIC leverage change and stuff in the last couple of months. GG, you're welcome. Glad it was useful. Walter, completely agree. You don't ignore the technical. It's that which, as you saw by the Qantas charts, if you look back at previous price action, you can see what sort of things will move with that market, that price, the price of that asset up and down as we go. It may give you an idea, not only in terms of potential entry points and stop placement or safety stop placement, but also with reference to the sorts of things that may move that during the duration of the trade. Okay, I think we've answered most of the questions, guys. I hope that's been useful. As I say, it's not a session we do very often. So I hope that's sort of interesting. So get busy. Just ignore the date. Get busy. Develop your process. Remember, it's ultimately about planting your flag in a trading idea. What I want, I'll just put my email in there for those of you who are less familiar. For those of you in Perth, obviously doing a live session this weekend for aimed at beginners. So it'd be great to see you there if you can make it along. I want to bring somebody along to hear me bang on for a couple of hours or so. Just drop me an email if you're interested in that. Oh, good grief. Just remember, it's mike.smith@gomarkets.com. Sorry, I've got a little problem with one of my keys, which isn't letting me type it accurately to just pop it in the box. It's not been a good technical day at all. Anyway, I love and leave you. For those of you who are attending the live update session tomorrow, it'll be great to see you there. Normal 12:30 kickoff Melbourne time. And obviously, if you can't make that or you're not rocking along to that, then enjoy the rest of your week and have a great weekend. It's always been a delight to have you guys here. David, well done on your initiative in being able to act. Andrew, you're welcome. You're welcome, guys. Rachel, always a pleasure. There will be recording this, Mike. Just drop me a line again. You're welcome, Walter. Cheers, James. Thanks, Chris. And cheers again, Wayne. Okay, right. I better go and get a drink. You guys take care. We'll catch you again very soon. Bye-bye for now.